Good morning, I'm Raymond Yeung. I'm a Hong Kong tax consultant. Now I'm going to talk about Hong Kong income taxes. Hong Kong has three types of income taxes. They are salary tax, profit tax, and property tax. Now let me first talk about property tax. Property tax is tax on property income. It's not a tax on property value. So if you have property income in Hong Kong, you will be liable to pay property tax. What is property? For tax purpose, a property means a land property. That is a building, a structure, and a flat, an apartment, a house, a parking space, etc. So, if you have a property in Hong Kong, and if you let it out for rental income, then you will be liable to pay property tax. What is property income? Usually, it means the rental income. So, to compute a property tax, first add up all the rental income in the year of assessment. What is the year of assessment? It means a period starting from April 1st to 31st March. So, you add up all the rental income in that period. Then you will have a deduction, a statutory deduction, 20%. That deduction is for repairs and outgoings. It's a fixed rate, So, for example, if rental income total is $100,000, then the statutory deduction 20% is 20,000. That means only the balance, we call it net assessable value, NAV, 80,000. That is the amount subject to tax. The tax, computation is easy. Just use 80,000 times the tax rate, the standard rate, 15%. That is the property tax payable. For those low income taxpayer, they may elect for personal assessment to reduce or to remove the tax payable under property tax. Only Hong Kong residents can elect for personal assessment. Hong Kong resident means a permanent resident or a temporary resident. And permanent resident means a person who has a permanent base in Hong Kong and he has substantial periods of a stay in Hong Kong in that year, usually more than 5 months. Temporary resident, the law has a definition. They count the number of days, count the number of days in Hong Kong. If he stays in Hong Kong for 180 days or more in that year, or if he spent in 2 years of assessment, he stay in Hong Kong for more than 300 days, then he can be regarded as a temporary resident and he can elect for a personal assessment. Maybe I know a non-resident, if he or she marries to a Hong Kong resident, then that non-resident can also apply for personal assessment. Another type of property owner, maybe limited company, corporation, because the rental income is also accessible under profit tax. So there may be double taxation of the rental income. In that case, the corporation, the taxpayer, can apply for exemption from property tax, so that the company need not pay property tax. If he pay it already, then such tax, property tax paid, can be used to set off its own profit tax liability. That's all for my talk about property tax. If you want more, please come to my website. Now I want to talk about salary tax. Salary tax is a tax on employment. If a person has employment and he has employment income in Hong Kong, he may be liable to pay salary tax. Now, what is an employment? Under the Hong Kong law, an employment means a relation between an employer and employee. You may call that relation master and servant relation. So, how can this relation be established, be created? In law, there must be a contract of employment to create the employment relation. In employment contract, can be a written contract, can be an oral contract, can also be by conduct, created by conduct. Of course, a written employment contract is the best. So, if you have employment, you have employment income in Hong Kong, arising in or derived from Hong Kong, and then you are, required to pay Hong Kong salary tax. This is the general charge. In some cases, employment may be, a foreign employment. The employer is not a Hong Kong company. The employer is managed and controlled outside Hong Kong. In that case, if the employee worked partly in Hong Kong and partly outside Hong Kong, then he can apply for a time apportionment assessment. Sometimes it is called time basis. That means counting the number of the days in Hong Kong and counting the number of days outside Hong Kong, and then his total income will be assessed, by reference to this proportion. That means he can get an exemption in respect of the income for the services outside Hong Kong. Counting of the days, usually day in, day out basis, the day of arrival in Hong Kong counted as half day, the day of departure from Hong Kong also counted as half day. The counting, just arithmetical way, whether his stay in Hong Kong is for duty or not, or for rest or for vacation, ignore that. All days are counted. All days outside Hong Kong are also counted. But in some cases, if the employee takes a long vacation leave, then ILD may use a computation to apportion part of the vacation to the Hong Kong days, because for those expatriates, when they take annual leave, they usually leave Hong Kong. Hong Kong ILD say this is not fair, because if we exclude all the days outside Hong Kong from the counting of days in Hong Kong, then they won't accept it. They say part of the leave must be attributable to the services in Hong Kong, so they adjust it. This is one of the exemptions under salary tax. There are also many exemptions. For example, 60 days, rule. I mean, if a person visits Hong Kong not exceeding 60 days, he need not pay salary tax. So, I mean, all days in Hong Kong are counted, for that purpose. Part of the day will be counted as one whole day, in Hong Kong. So, if you just visit Hong Kong for a few days in that year assessment, then you need not pay Hong Kong salary tax. And there are also exemptions for all services outside Hong Kong. In that case, you need not pay salary tax. Whether ILD accept your claim that all services outside Hong Kong, I mean, usually it's mainly, questions of facts. If you come to Hong Kong to conduct meetings, to see your boss, then ILD will not accept it, because seeing your boss, taking advice from your boss, or maybe attending a community meeting, means you work in Hong Kong. That means you have services in Hong Kong, and that exemption is not applicable. And there's also exemption for those taxpayers. He work partly in Hong Kong, partly outside Hong Kong, and he pay foreign income tax. They can also can get time apportionment. Something like that. Hong Kong salary tax. There are a lot. Deduction. They call it expenses deduction. Under the law, if the employee incurred expenses for earning his employment income, then he can apply for a deduction of expenses. But the deduction is sometimes difficult to apply, because the law, the condition, is stringent. They say, in the production of income, you must be incurred in the production of income wholly, exclusively, and necessarily. So you have the taxpayer, the employee has the burden of proof. For those salespeople, if they need to entertain, their clients and incur expenses, they can apply for deduction. Usually, the deduction is 10% of the commission income, not the basic income. So, if you have two jobs, from traveling expenses from one job to another job, it's business nature, and you can claim deduction for such traveling expenses. So then some kind of deduction, and of course there is a deduction for a contribution to mandatory provident fund. But there's a limit, something like $15,000 per year. And if you have a donation, to charities, you can also apply for a deduction for donation expenditure. There are also other types of deductions: self-education expenses, elderly residential care expenses, home loan interest deductions. If you buy a house in Home Kong, buy a flat for your residence, the interest you pay to the bank can be deductible. From your assessable income. If you want to know more about deductions, the salary tax, you may come to my website. To find out. And after deduction of the expenses, then you can get deduction for personal allowance. If you are not a very big income earner, for most salaried taxpayers, they will get personal allowance, basic, for single. If you are a married person, and if your spouse is not working in Hong Kong, maybe if your spouse does not have employment income in Hong Kong, in that case you will get married person allowance. The amount of the allowance is double the single allowance. Very easy. If you have children under 18, or you have children under 25, and he attend full-time educations, attend a full-time school, you can apply for child allowance. Quite generous, you know, the amount of the allowance. There is also a dependent parent allowance. You know, if you have father, mother, grandfather, grandmother living in Hong Kong, I mean, he must be living in Hong Kong. They call it ordinarily reside in Hong Kong. They live in Hong Kong for a long time, then they usually will qualify as a resident in Hong Kong, ordinary resident in Hong Kong, and he is old, you know, age over 55, or you may get DPA, dependent parent allowance. If you live with the parent or grandparent, you can, you know, continuously throughout the year of assessment, you can get additional dependent parent allowance. So this allowances, and there are other allowances, maybe dependent brother sister allowance, single parent allowance. If you want to know more about this, you come to my website to check it out. Maybe you can seek advice from the tax consultant, or maybe you go to the IRD website and learn more. To compute salary tax, very easy. After, you know, the total employment income less all the expenses, deduction for you know, anything, then you less your personal allowance. Then that amount is the net chargeable income, NCI, call it. And on the net chargeable income, you know, the tax, you know, on this income will be at a graduated tax rates, you know, ranging from 2% to 70% layers of, you know, different brands of income at different rates, 2%, 7%, etc. You know, 12% and then 17% the maximum, and then you compute the tax. In practice, I already use the computer program to do the computation. You won't get wrong, you know. And you know, for those big income earner, they will be taxed at standard rate 15%. But in that case, no personal allowance will be given. That means the total employment income less deduction for expenses, then this month will use it at times 15%, and you get the standard rate tax. For most taxpayers, the standard rate tax will be greater than the tax payable under the graduated rates. But if you earn millions of dollars in a year, you may be liable to salary tax instead of the graduated tax rates. So that means in most cases, for all taxpayers, the tax rate are generally lower than 15%. So you can say in Hong Kong, salaried taxpayers, they are very lucky. You know, their tax rates are so low. You know, as compared with other parts of the world. You know, that's all for salary tax. Now I want to talk something about profits tax. Profit tax, of course, is a tax on profits. Profits means profits of a business. So, who pays the profit tax? The business owner. Who is the business owner? He may be a sole proprietor, a partnership, a corporation, a limited company. It may be a body of person. I mean, in most cases, you know, the taxpayers, sole trader, partnership, and corporation. The tax rate for corporations is 16.5%, and for individual partnership partnership partners, the tax rate is 15%. Profit tax rate is 15%. Profit tax, of course, a tax on profits. What is profits? Profits means the assessable profits. Profits assessed to tax. What is assessable profits? AP. In case law, AP means accounting profits as just in accordance with the tax law. That means you first get the accounting profit, and then you do adjustment to it in accordance with the tax law, and the amount you get is assessable profits. First, accounting profit. Where can you find it? In your accounts, profit and loss account, the net profit. That means your sales revenue less the cost of goods sold and less a lot of expenses. And if you get a surplus, that's a profit. Maybe I call it, the profit and loss account. Some people call it income statement. That's the same. How to compute accounting profit? Of course, you should do it in accordance with generally accepted accounting principles. So you should, prepare the accounts, prepare the ledgers. If you don't keep books, you may be liable to penalty. Because IRD will use the accounting profits to compute your profit tax payable. Then, what are the adjustments, to the accounting profits? The adjustments are made in accordance with tax law, as I said. What is tax law? Tax law means Inland Revenue Ordinance, means Inland Revenue Rules, means IRD practices. Call them DIPN, Departmental Interpretation and Practice Notes, and a lot of tax case principles. So to compute the profit tax, the profit tax computation may be, difficult. You may not, have the knowledge, skill to do it. So you need maybe a professional advice, or you may ask a professional to do it for you. It may be an accountant, an auditor, a tax representative, tax advisor, an expert. Beware. Be careful. If you compute the tax wrongly. If you compute the AP incorrectly and you put that incorrect figure, the amount in the tax return, you may be liable to penalty because you have filed an incorrect tax return. If you don't have a reasonable excuse, you may be, penalized. IRD can take penal action against you. That may be a prosecution, or maybe a tax, penalty, a fine, up to 3 times the tax undercharge. So be careful when you complete the tax returns. And if you have doubts, you have problems, seek advice from professionals. The tax payable is quite simple. Usually it will be the AP times the tax rate. The tax rate, if it's corporation, 16.5%, the partnership or sole proprietorship, then tax rate is 15%. You can compute the tax payable. And of course, you have to make adjustment because there may be a provisional tax. If you have paid provisional tax last year, then such provisional tax paid can be a deduction from the final tax, and on that amount you also need to add, next year provisional tax, so to that, the balance will be the amount of tax payable, and that amount should be put in the profit tax return. So I think that's wrap up my today's talk. Goodbye. If you have problems, maybe you want advice on Hong Kong taxation, welcome to call me, or welcome to my website for more information.